Hello friends, welcome to the Adkup Show. So let's cut to the chase without wasting time. This week has been a wild ride for tariffs, trade, and the US economy. On March 4th, Trump slapped 25% tariffs on Canada and Mexico, plus an extra 10% on China, and markets freaked out. Stocks tanked, Canada and Mexico retaliated, and everyone thought we were headed for a full-blown trade war. And then just 2 days later, that is March 6th, Trump partially hit the brakes. He suspended tariffs on a chunk of goods from Mexico and Canada until April 2. So now the question is, what's going on? Why did he pull back and why did the stock market crash so hard? First off, let's break down what exactly happened. On March 4th, Trump announced 25% tariffs on nearly all goods from Mexico and Canada. That's the US two biggest trading partner. And then he jacked up tariffs on Chinese imports from 10% to 20%. He also hit Canadian energy products with a 10% tariffs. His official reason behind doing this was about national security and fentanyl trafficking. Back on January 20, he declared a national emergency, tying border security to trade policy. It was mostly about an illegal migration. He claimed these tariffs would force Canada and Mexico to crack down on drugs flowing into the US. But here's the kicker. Market didn't buy it and it was very natural. The Dow dropped nearly 700 points that day. The S&P 500 fell 2.3% and the Nasdaq took 2.8% hit. Investors saw this as a reckless escalation, threatening the $2.6 trillion in annual trade between the US, Canada, and Mexico under USMCA, that is the US-Mexico-Canada Agreement. This shows that Trump doesn't have a plan when it comes to his favorite word, that is tariffs. Now look at this. Canada and Mexico aren't just neighbors. They are economic lifelines. They influence millions of people every day in each other's country. In 2024, Canada sent the US $450 billion in goods. Oil, cars, and aluminium were major exports of Canada to the US. Then Mexico shipped $480 billion, mostly autos and electronics. Together, that's over 30% of all US imports. Slapping 25% tariff on that is like tossing a grenade into your own house. Canada retaliated fast, hitting $20.8 billion in US exports with their own tariffs. Everything from soybean to whiskey. Mexico threatened the same, targeting US farmers and manufacturers, and according to media reports, the automakers in US built pressure on Trump administration to withdraw this tariff. Hence, he halted these tariffs until April 2. Now, China meanwhile promised countermeasures on extra 10% tariffs, which piled onto already tense US-China trade relations. The result was a global trade panic. Now let's try to understand why did the stock market crash. The answer for this is very simple: fear of disruption. When Trump announced the tariffs, Wall Street saw a triple threat. One, higher costs for US companies relying on Canadian and Mexican supply chains, like automakers Ford and General Motors, who build their cars across borders. Two, retaliation hitting the US exports. Think about agriculture and energy. They are massive sectors. Three, inflation fears. Tariffs means pricier goods, and with the Fed already wrestling inflation down to 2.8% in February 2025 as per latest CPI data. This was a nightmare scenario. The Tax Foundation crunched the numbers. Those 25% tariffs could have slashed US GDP by 0.2%. That's $50 billion and killed 223,000 jobs, even before Canada and Mexico hit back. This is the reason why stock market crashed. This will happen even in the future if unplanned implementation of tariffs happen. Then after all this happened, on March 6th, Trump blinked. After a call with Mexican President Claudia Sheinbaum and the pressure from U.S. industry, as I mentioned earlier, he suspended tariffs on goods complying with the USMCA. This includes about 50% of Mexican imports and 35% of Canadian imports. Steel and aluminum tariffs will still be coming on March 12th, but the big rollback covers auto parts and more. So why did Trump took this U-turn? Let's unpack the reasoning because it's a mix of politics, economics, and some serious arm twisting. Reason 1. The auto industry screamed bloody murder. The US auto sector is $1 trillion beast, employing over 1.1 million people directly and millions more indirectly. Cars aren't made in just one country anymore. They are stitched together across borders, thanks to globalization. A pickup truck might have its engine from Mexico, chassis from Canada, and assembly in Michigan. The Alliance for Automotive Innovation warned that 25% tariffs would spike car prices by $3,000 on average, tank sales, and cost 100,000 US jobs. Ford CEO said that it would be catastrophic for their 2025 production plans. General Motors GM echoed that, noting 40% of their parts come from Mexico. Trump loves jobs, especially manufacturing jobs, so this hit was his weak spot. Suspending tariffs on USMCA goods was a lifeline to Detroit. Reason 2. Mexico played a ball on fentanyl. Trump being obsessed with linking trade to border security. In his January emergency declaration, he called fentanyl a national security crisis, claiming 90% of it enters via Mexico, often with precursor chemicals from China. Data backs him up. U.S. Customs seized 26,718 pounds of fentanyl in 2024, up by 10% from 2023. After the tariff announcement, Sheinbaum promised tighter border checks and a crackdown on cartels. Trump's suspension until April 2 is a test. Show me the results or the tariffs will come back. It's a classic Trump's move: threaten, negotiate, and then claim victory. The problem with this narco-control policy via tariffs is that Trump doesn't want to talk or do anything about the demand side which prevails in the US. Fentanyl is in demand in the US, hence there is a supply. This is not just an economic issue, it's also a cultural issue, and Trump is ignoring that. If you want to know more about this in details, then check out my video. The link is in the description. Now moving ahead with the reason number 3, that is Canada's got leverage. The US imports 4 million barrels of oil daily from Canada. That's over 60% of US crude supply. That 10% energy tariff slapped on would jack up the gas price, which is already hovering at $3.20 a gallon as of March 6th. With midterm elections looming in 2026, Trump can't afford voters foaming up at the pump. Plus, Canada's aluminium makes up 70% of US imports, which are vital for plane, cars, and cans. Trudeau threatened to cut exports, and US manufacturers begged Trump to back off, and he did, for at least now. There's also a political angle to this. Trump base loves tariffs. They see it as a sticking it to foreigners, but Trump is juggling that with economic reality. The initial tariffs was a flex, showing he's tough on trade and drugs. Then rollback happened, which is a pragmatic decision to make. He can say, I got Mexico and Canada to move on fentanyl without crushing our economy. It's a win-win narrative, even if it's messy. Plus, US Commerce Secretary Howard Lutnick hinted at fairness in trade talks, suggesting this pause buys him time for a bigger deal. Now let's zoom in on the stock market crash, because it's not just about tariffs, it's about confidence. On March 4th, when tariffs hit, the Dow fell 696 points, its worst day since December 2024. The S&P 500 shed 88 points and the Nasdaq dropped 407 points. So the question is why it was so brutal. Now look at the sectors. Industries like Caterpillar, which was down by 4.8%, rely heavily on Canadian steel. Consumer discretionary. Now think about Walmart, which was down by 3.2%, and the reason was obvious, that is higher import cost. Even tech like Apple fell 2.5% because of China tariff fears. Now here's the bigger picture. The US economy is being chugging along at 2.7% GDP growth in quarter 4 2024 as per latest data. Unemployment steady at 4.1% as of February's BSL report, but tariffs threaten these numbers. Goldman Sachs estimated a 0.3% GDP hit from the Canada-Mexico tariffs alone. Worst if retaliation escalates. Inflation is another worry. Moody's Analytics predicted a 0.5% CPI bump by mid-2025 if tariffs stuck. Investors saw a domino effect: higher cost, lower profits, lower growth. That's why the stock didn't just dip, they crashed. Retaliation made it worse. Canada's $20.8 billion in tariffs hit US farmers hard. Iowa soybeans, Kansas wheat, California almonds. Mexico's threat targeted Texas oil and Midwest machinery. In 2024, US agricultural exports to Canada and Mexico topped $60 billion. If that is lost, then rural America, which is Trump's heartland, will feel the pain, and that's not good when it comes to political support. The stock crash wasn't just about Wall Street, it was Main Street signaling distress. So where are we right now? Well, as of March 7, that is 1 or 2 days ago from wherever you are watching this video, the tariffs rollback sort of calmed things down. Canada and Mexico are in holding pattern. Steel and aluminum tariffs loom March 12, and April 2 is the deadline for the USMCA reprieve. China is still simmering with that 20% tariffs in place. Let's hit you with the latest data. US trade deficit with Mexico and Canada shrank to $200 billion in 2024 as per Census Bureau stats. Tariffs could have blown that up. Steel prices are already up by 5% since March 4 as per S&P Global. Gas prices ticked up 3 cents this week. Now here's my personal take. Trump withdrew the tariffs because the blowback was too fast and too fierce. Industries, allies, and markets all screamed at once. The stock market crash was a wake-up call. You can't disrupt $2.6 trillion in trade without chaos. But this isn't over. April's 2, the next showdown. And if fentanyl talks falter, we are back to square one. The market is very fragile. Another 700-point drop isn't off the table. All this clearly shows that DC and Trump who don't have any plans. They are randomly using tariffs to form a rhetoric. No result is showing up. However, the trade war isn't just a black and white game. It's a complex board. Thanks again to globalization. Don't expect 100% results on everything. Moreover, it's a long-term game which needs patience and carefully built strategies. So what do you think? Was Trump smart to back off, or should he have doubled down? Drop your thoughts below and hit that like button if you want more breakdown like this. Subscribe for next twist in this saga, and I'll see you in the next one. Stay sharp. Peace out.